In the last session, we were talking about secondary market, and I said secondary market is called stock exchange, and we saw the functions of stock exchange, the meaning of stock exchange. Here we will be learning, in this session we will be learning how the activities happen in stock exchange, or we can say, technically speaking, what are the procedures which are followed in stock exchange. So we start with the session stock exchange, the procedure in stock exchange. Once again we are just refreshing. It is a market for purchasing and sale of existing securities. Stock exchange, existing securities are bought and sold. Securities are traded, cleared and settled within regulatory framework of SEBI. I said all the security transactions, all the transactions connected with securities is being guided, is being clearly regulated by Securities Exchange Board of India, as it is the apex body which controls securities exchange in India, and certain procedures has to be followed. So SEBI has very clearly given guidelines regarding how things have to happen while securities are being transacted. Now we are going to see the trading procedure on a stock exchange. The first and foremost thing or foremost step in the procedure of trading is selecting a broker. A broker has to be selected because everyone is not allowed to do transactions in stock exchange. A broker who is registered with the Securities Exchange Board of India must be selected by an investor if he want to enter into transaction in a stock exchange. And brokers can be individuals, they can be partnership firms, there can be corporate bodies. They can be, it need not be a single person alone, it can be a firm, it can be a partnership firm, or it can be a corporate body. So if an investor want to do transactions, he or she has to select a broker who is registered with SEBI, and broker will open a trading account in the name of investors. Once the selection of broker is made and all the details are provided, there are a number of details provided. One of the mandatory requirement is to provide a PAN card. PAN card must be there, and all the details regarding the identity of the investor is to be provided to the broker, and broker will open a trading account in the name of investor. Now once the selection of broker is made, the next step is opening Demat account with a depository. Earlier trading was done and all the details, all the documents was in paper form, but nowadays everything is in electronic form. So that is why this step comes, this step is coming in this, because Demat account is an account to trade listed securities in electronic form, because we can trade securities only in electronic form in stock exchanges. So it is an account which has to be opened just like a bank account. We will be opening an account where all the transactions of the securities which we are buying or selling happens through this account only. And who is a depository? Depository are organizations of firms which are given right to hold securities in electronic form. So those organizations which are doing or which are holding the securities in electronic form, dematerialized form, they are called as depository. And in India there are two depositories. In India there are two depositories who are maintaining or who are holding securities of investors in electronic form, in Demat form, that is NSDL, National Securities Depository Limited, and CDSL, Central Depository Services Limited. So these depositories will be maintaining Demat account, dematerialized account, in which the investor can transact the shares, or when we are purchasing shares, it will come when we are selling shares, it will go from demat account, and depository are holding, or depository firms are holding this in electronic form, just like a bank. Okay. And the depository interact with the depository participant, that is your broker. He will be giving an idea to the investor regarding, an investor directly doesn't go to a depository, it is opened by a broker, or it is operated by a broker, or it is all the details, all the balance and everything will be informed to you by your depository participant. Your brokers will inform what is bought, what is sold, what is your balance, everything will be informed. So, second step is to open a demat account, dematerialized account with a depository participant. That is the second step. And the third step is placing the order, placing the order with the broker. Clear instructions must be given. Instruction should specify the securities to be bought and sold. We have to inform the broker through phone or internet, whatever be regarding the specifications of securities to be bought and sold. Price range at which it has to be bought or it has to be sold must be clearly informed. And order confirmation slip. Once he receives the order, once broker receives the order confirmation slip is being issued to the investor by broker. So, broker gives an order confirmation slip. So, that is the third step. Then comes executing of order. Once the order is being placed, the broker has to execute the order. According to the instructions of investor, broker will go online and find the best price. Best choice is being found, best match is being found with the requirements of investor by broker. Broker will go online and find it out. And once the trade is being executed, once they have found the match and once it is executed, the broker gives a document called contract note, and a contract note includes number of shares bought or sold, the price, the date of time, and the deal, and together with that brokerage charges will also be mentioned in that. So, a contract note is being given to the investor by broker. So, executing order, and a unique order code UOC number is assigned to each transaction, so as to make sure that all the transactions are clear and safe. UOC number is being provided. So, execution of order comes. Once execution is over, the last step in transaction in a stock exchange happens, that is settlement. And mode of settlement depends upon the nature of contract. What is the contract made between broker and the investor matters. And usually they follow a T+2 rolling settlement. That means a security purchased on Monday will get settled. Transaction day plus 2 days. Transaction day is Monday plus 2 days, Tuesday, Wednesday it will get settled, and settlement is being made. That is the last step in trading procedure. One more thing you have to learn, that is about dematerialization. That is nothing that is not a step in trading procedure. Trading procedure ends by settlement, but you must understand what is dematerialization. Dematerialization is the process of holding securities in electronic form, as I have said. Nowadays transactions are happening through electronic media, through internet, so it is maintained in electronic form, and this is helping shares to be transferred to other accounts like cash. That means easy transaction, no need of transferring papers, just sitting at a place. It can be transferred to another investor's account when he is purchasing. It is enough that through the help of internet itself it can be transferred. Ensure settlement of all trade through a single account, whether purchase or sale, everything happens through the demat account of the shareholder or the account of the demat account of the investor, and there is no risk of theft, loss or forgery. No much risks regarding security transactions are there here. So that is all about the trading procedure and dematerialization.